Hey guys, just back with another video for you guys. This video is on a trading strategy that you guys can use. So the strategy is, it was developed by Larry Connors. He is a old school trader and a algorithm developer. I forgot about his whole biography or his autobiography. I think he used to work at JP Morgan, in the trading department at the bank. He used to trade in like the 70s, 80s, and the 90s. So he's like an older dude. Maybe 80s and 90s. I think he continued to trade maybe until the late 2000s, where he decided to open up his own hedge fund or something. So you guys can check out his autobiography if you're interested. So yeah. So the strategy requires a 200 simple moving average. If you're on the TradingView website or the TradingView app, you just click on indicators. You can type in moving average ribbon. Select that, and then you just need a relative strength index. Just type in REL. Select that, add it to the chart. You can save it. And so now we have missing one. So you need a 200 SMA, and you also need a 5 SMA. What color is good? They're missing a lot of colors here, aren't they? Like some of the darker colors. Like there's no midnight blue or midnight purple on here. It doesn't really matter, we'll just go with white so we can see the line. And then we can take this, click on visual order. So click the settings, visual order, bring to front. That way the lines go above the candles so you can see them, they don't disappear. Okay, so what the strategy is basically, so there's, according to Larry Connors and a lot of banks and financial institutions, they also believe that if an asset is under the 200-day simple moving average, then that asset is said to be bearish, and that has to be on the daily chart. So the euro has been bearish since July 21st, and since then it hasn't been able to cross back above the 200-day simple moving average. We had it cross down and back up here, so kind of like a fake out, and then it went back up, and then since then it has been bearish. So a lot of financial institutions, perhaps not everyone in the department, but they are usually bearish only long term. Maybe not short term, but while the asset is under the 200-day simple moving average, they are short only. So that's why the euro has been under pressure. The dollar strength index, DXY, the US dollar, has been above the 200-day simple moving average. It's pretty much the only asset that has been above the 200-day SMA. So based on that, so the first condition is the asset, stock, currency, future, crypto, has to be under the 200-day simple moving average. Second condition, the price has to be above the 5-day simple moving average. So here we are below the 200-day simple moving average, and we were above the 5-day simple moving average as well. So the third and final condition is the RSI2 has to be above 90. So here the RSI2 is above 90. It's at 95.86. Probably was higher at some point in that day. Well, it was. It definitely was. Probably closer to 97 or 98 maybe. And there's two ways to enter the market. He believed in an aggressive strategy where you can buy at the day's close. So once the conditions are met, you can buy either so basically the aggressive strategy is to buy before the day's close, like the candle day. So for example, for me, I'm on Pacific time. You might be on New York time, or you might be on some other time zone, London or Asia or something, Australia. So if, for example, for me on Pacific time, the candle closes at 2 o'clock p.m., 1400 hours. So that means you would buy, just as an example, you would buy before the day candle closes. So you would have until you have until 1:59 and 59 seconds before the clock strikes 2 o'clock to buy. Or in this case, enter a short position. And then there's a conservative strategy the conservative strategy is that you buy on the day's open, the next day's open. So you would buy in this case on my chart, not on the 13th of September. Not on the 12th of September. You'd buy it on the 13th of September at the market open. So you'd buy at either 2 o'clock or 2:01 p.m. Probably with the spreads, you'd maybe want to wait till at least 3 o'clock, just because spreads are at least high for at least an hour. I have a time filter. I'll share that with you guys. I made it in MQL4, so I'll be happy to share that with you guys, and we'll also be coding this into an expert advisor later on. So the full EA, I'll be giving that to you guys for free, so check it out. We'll be making it together. Stay tuned for that. We'll program it into a robot. So basically, the problem with this strategy is that it doesn't happen that often. And if I didn't mention, it has to be done on the daily chart. So this strategy has to be used only on the daily chart. It probably won't work well on the 4-hour because the RSI2 keeps moving up and the candles keep moving up. So RSI2 works pretty much the best on the daily chart as it is. So let's say in the month of September, we only had one trade with this strategy. Here it was almost successful, but we didn't get above the 5 SMA. I thought we were going to. Perhaps next week or something. So we had one trade in September. That's not that good, to be honest, because a lot of the major pairs would do the same thing. So in August we had one as well. And perhaps another one too, because that would have been up above 90 at some point. Pretty much up, so it was closed, closed at 607. Was up at high of 102.758. So yeah, probably was up. Probably was up at 90. So let's say you would have got two in the month of August. In July, you would have not had any because it didn't get above the SMA 5. Almost, but not entirely, unfortunately. So no. So July, you would have only had the one. Actually, no, sorry. That was August technically. So you would have just had one. Two. Is that two in August? No, none in July so far. June. See, it happens so the back tested win rate, so the back tested coded win rate of the strategy is 60 to 65%, depending on the currency or the stock. So I think major currency basket. So the major pairs in the currency basket were 65% overall win rate. That was with the main pairs. So the main 7 pairs are the ones I always talk about. Any of the crosses they didn't work as well on. They worked less. And why is that? Well, that's all fundamental, because they're not as they're less traded. So the main baskets are what the banks focus on. The main basket, sorry. Anything else is kind of like just, it can be anything. Like, it just depends. Not really. I know a lot of institutional traders or like recreational traders, they watch the crosses, but I always recommend to stick with the main pairs only. We'll talk about that later. In May we had 1, 2 actually. None in June. So that's, you may have to cycle. You may have to look to the crosses if you're using this, because, well, I guess the win rate goes down, so maybe that's not really a good idea. So 1 in March, none in April. The best thing to do is maybe check the other pairs, check the other 6 pairs to see if you get some. Usually they are correlated. So if one's happening, another might, but not always, so just check it out. So yeah, that's the strategy. The thing is, you don't get as many, obviously you don't get too many trades with it. So you got 2 in March there. It was above. Another in February. So yeah, so what's the stop? So what's the take profit? So the take, I didn't go over that. So the take profit is the 5 SMA. That's what he believed in. That you sell the asset when, or like if you're short selling, you close your position when the price touches the 5 simple moving average, and your stop is also the 5 simple moving average. The stop is also the 5 simple moving average. Why is that? Or like, how does that work? Well, because he believed that the price is always above it travels above and below the 5 SMA so often that it's just the stop that he believed in. So if you have a look, for example, how many times did it really go below and over the 5 SMA? Well, very, very often. Right? It definitely touches it quite often. This would not work well on the 4-hour. Unfortunately, just this strategy, it wouldn't work well, I believe, because the RSI2 has a tendency to stay above 90 more so on the 4-hour rather than the 1 day. But on the flip side, in other strategies, the 5 SMA on the 4-hour goes back and forth much more often. But yeah, just in this case, it goes above and below the 5 SMA still very often. Like, see how many times it's above, or it connects with it. It goes below, it goes above, goes below, goes above, goes below, below, above, below. See, it's like it's constant, so it always connects back. So that's why he chose it as his stop, especially in those conditions. Like, he felt like it was safe to use it as his stop and his profit. So yeah, that's the strategy. You guys can check it out. You can use it on anything. If you're using it in Forex, I would recommend just sticking with the main pairs. It also works on like gold, oil, crypto, S&P 500, NASDAQ 100, pretty much anything. Maybe not so much with bonds and yields. I maybe stay away from those. You want stuff with the highest volume. So what has the highest volume in the world? Well, Euro USD does, pretty much. It's the most traded, then probably Great British Pound, and then the rest of the majors. Those are the highest volume pairs to trade, pretty much. They work the best with algorithms. So yeah, so that's the strategy. Hope you guys like the video. Hope you guys can use the strategy in your trading. If you guys like the video, you can subscribe to the channel to see more trading, investing, or coding videos. And I'll see you guys next time. Take care.